if you think about what sometimes happens when you're trying to get the bottom tick, and it doesn't quite trade the bottom, and it doesn't quite trade the bottom, and it doesn't quite trade the bottom, and the price takes away off to the upside, and you look at it and you go, damn it, I've missed the trade. Whereas if you never actually traded with candlesticks or prices, you'd have taken the trade, right? You'd just have done the deal. You'd have already have taken the trade, you'd be in it, you'd have saw the clock ticking down, you'd just have done the deal based on value. So in other words, you're not trading necessarily based on you're not trading based on the price action. You're not necessarily trading based on purely the liquidity. You're trading based on relative value, and you're therefore patient waiting for the relative value to appear. And that's what we've got to try and understand when we're looking at these elements, that we're trying to trade value. If we see value and we see volume, that's another question. That's another point we're trying to make sense of. If, for example, if I look at the NASDAQ, and if we look at just simply NASDAQ trades, take a look at the NASDAQ here. What trade would you want to be doing? Well, I would want to be buying, correct? I'd want to be buying. The value line's going up, so I'd want to be buying. So if the value line's going up and I want to be buying, what am I looking for? I'm looking for perhaps a little high volume into a small short-term value divergence. Well, for example, like this one here, there's a volume that's as high as it's been, so that would be a buy trade, correct? So when the value starts coming back down again here, I see a big increase in volume. I'd like to buy that, but perhaps after a rejection, after a reversal. When I see the volume increasing here, I'm thinking to myself, perhaps putting in a buy in that area would make a lot of sense. When I see this very large aggregation here, I'm thinking, okay, passive buy on the aggregation. Passive buy on the aggregation. So when we start to see this, we're starting to recognize some incredibly easy opportunities. Now take away the value and then look at what happens in those areas of trade. Take a look at what I would have traded. But think about what you wouldn't have traded if you didn't have if you had the price action. So for example, you can see this buy trade here. Yeah. So would you have taken that knowing that there was a paycheck liquidity here? Possibly not, right? You might have looked at that paycheck and said, I'm not buying unless I get that paycheck liquidity at the bottom edges. And then when you see this buy trade here, you say to yourself, well, I'm not buying that unless I get the paycheck at the bottom edges. Now, you got the paycheck on this occasion, so regardless of what you think about it, you'd have bought that regardless, right? You'd have definitely bought that regardless, but you might have missed the two other big trades, mightn't you? You might have missed this buy trade here. You may have missed that buy trade there, which was worth a lot of money, and you may have missed this buy trade here, which was worth a lot of money. You see the idea? See the concept? So the idea of using value to trade, just value, and then using value and volume to trade, which is what we just did there, value and volume. This gives us this idea that we should be able to work into those simple concept areas and say to ourselves, I get that, I understand that, that's a real money opportunity for me. I can take advantage of that real money opportunity, and I can join in with the buying or the selling without even necessarily needing that lower price. Now, as a commercial, I want the lower price, but you don't always get it. How many years ago did we have that conversation, Paul, about gold? About not needing the bottom price or not needing the top price? Years ago, right? The idea that we trade relative value, and we prefer to trade volume as well on top of that, because that's part of that benchmarking process. It's always best when we can tie in the two elements. But an increase in volume is good enough. It's a lean. It's a lean. An increase in volume is good enough. It's a lean. And on the basis of the lean, we can start adding in some other elements. We can start adding in the fact that the level 2s at the top edge are starting to become sticky. Every time you make a new swing high, guys, and it rejects, that is becoming sticky. As soon as you start seeing a level becoming sticky, if you want to buy into it, you demand a bigger discount, yes? You demand a bigger discount. So you need those bigger discounts to get into another buy trade if you're wanting to buy into this storyline. Sensible? Sure. Is Vanguard still bullish? Sure. Should we still be buying that bottom edge? Sure. Did you get an opportunity with an increase in volume to buy that bottom edge? Sure. Did you buy the bottom edge? Sure. Are you buying at top edges? No, because we're getting level 2s. We ain't buying tops. We ain't buying BSG squeezes, but we can still buy the bottom edge. We take a punt, we try it, we try and get the deal done. The big volume tells us we're right to do that deal. That looks like a big aggregation, and it seems in an unusual location at 80. So I'd be very, very keen to take that as a bit of profit, because that's a question, right? That's a question. Why did we get aggregation there? Why did we just get aggregation at that stage? That's not what I would have expected at that point. Now, the key to this is, the key to the whole quick start is, you practice trading one line at a time. Have you heard me saying this before, guys? Have you heard me mentioning this before? One line at a time. You don't trade 10 lines at a time until you know whether you're happy with the line, not happy with the line, just simply don't see the value divergences required on the line. The reason why we trade one line at a time is so that we know how much slack to give it. Some lines are 1.0s. Some lines are minus 1.0s. Some lines are 0.7s, minus 0.7s. So you give the 0.7s a lot more slack, don't you? This is something that I'm sure that Kuba and Argo are talking about or have looked at when they've been working on their side of the algorithm. I'm sure this is what all of you guys have been looking at when you've worked on any of your value reads. I hope it is. If you don't know whether it's a 1.0 or a 0.7, how much value do you give it? Otherwise, you end up buying on a drop that keeps dropping for a distance because it's only a 0.7 instead of a 1.0. It has room to drop when it's a 0.7. It has a lack of room to drop when it's a 1.0, right? So it gets tighter. The value gets tighter. So we can actually start understanding that these 1.0s and the 1.0s and the 0.7s are allowed to wiggle a little bit. They're allowed to give us a little bit of wiggle room. But here's the things that you simply can't account for. We come into this area. Remember what I said? Why did they aggregate at that price? Well, that was a good exit, wasn't it? We got a question that we simply couldn't answer because nobody should have been aggregating at that price. But they did. So we closed out our long position for what turned out to be the perfect close, correct? Now, if you don't want to close it at that stage because you don't know if it's just going to keep going, well, you bring up your... So if your hard stop was, say, here, and you see that aggregation, what should you do? What should you do? You should bring up that hard stop right in there so you close your trade off maybe a few ticks lower. And then you just let this ride down and you say, that didn't do what I was expecting it to do. Why did it not do what you were expecting it to do? Dippity-doo did that when it needed to do the other thing, right? So we came back down again. So what are we going to do? We're going to wait for something else. Something else, perhaps this level 2 liquidity. Something else, perhaps this measured move. Something else where we're getting a guaranteed discount price. And we start trying it all over again. We say, okay, so we don't have to panic. We just have to say, well, we're still bullish, so I'm going to bid this guaranteed discount price. Pretty simple, straightforward stuff. Do you see how the logic makes sense, though, guys? You see how the logic makes sense? Now, why this trade hasn't been successful either? Well, we can see why this trade hasn't been successful yet, because the short-term value is pretty bearish. It's not that bearish. It's not that bearish, right? It's not that bearish. So when we look at that, there's no reason why you can't take a buy off of that down candle into that high volume sell. There's no reason why you can't take it. Now, it's not been successful, so you ain't going to do it again. It ain't been successful because you never picked up any bullish value following your buy trade. You don't know that until you've bought it. So get over it. You might say, but that trade never made me any. It did make you money. You just went from 140 to 150. You just made $200. What do you mean it never made you any money? So it comes back down again and you say, right, I love the area, but the sellers in here still jamming up in these upticks. I can only buy it, right? Value tells me I can only be a buyer. So I don't have to worry about trying to figure out where the sells are unless you want to start moving lines. So what are you going to do? You're going to come back. We're still in a guaranteed discount price, yeah? We're still in a very strong guaranteed discount price area. So I still like the buy trade. So you just bid a little bit lower. You bid a little bit lower and you try it again. And obviously when it comes up and you're starting to see, right, this time we got a little bit of a side kick to the upside here. That was good. Okay, so on the basis that I get a little push to the upside, I'm not going to be as aggressive in my exit profit taking areas here. So obviously when we get that little side kick to the upside, we can start looking across and say, right, that's bullish against that. Is it bullish against this? No, it's still not bullish against this, is it? What do we mean it's bullish against this? So if I draw a line across there, and I say to you, is it bullish against that green candle? That's where value was before, and this is where value is this time. Is it bullish against that area there? No. So am I going to take profits above that price? Yes, I am. I'm still not getting enough short-term value, Jack. Short-term. You see that? You understand that, Miguel? Short-term value still against us. So make sure you bank some monies. Stops at break even +1. Let it go through again. Let it go through again. And then you say, okay, it's going through again. So what are you going to do? Well, this time we've had 2 failed auctions. Let's go and let's kick this down another distance. And let's see if we can get another guaranteed discount price in here. Now, obviously, in terms of guaranteed discount prices, you've just bounced off the guaranteed discount price. So your stops are at break even +1. Stops are at break even +1. Life can't get any easier, can it? Life can't get any easier. So you've got a guaranteed discount price, but when you look in the background, obviously a big picture guaranteed discount is quite a distance away from this, right? Big picture guaranteed discount is a massive distance away from here. You know, guaranteed discount price, one would imagine, is going to be down in this area here of 12, a break of 12,100. But obviously we've got to keep working this. Now in the short term, we've lost the short term value completely. Zoom in, you'll see what I'm talking about. Look, we've lost that short term value. So I am not rebidding this at this stage, not a chance. And if it rallies without me, it rallies without me. I can always buy on a momentum shift back to the buy side. I like the buy trade, but I like the buy trade as a macro. I like the sell trade as a micro, and that means I ain't buying it again. I ain't buying it again. Have we lost on any of these trades? Not one single one of them. We haven't lost on a single trade. Every single one of them has been a profit. That's all we can ever ask for, isn't it? Every single one of these buy trades has turned a profit. Or a scratch. Profit or a scratch, guys. It's the way to make a living, isn't it? That's the way to make a living. And when it starts dropping again, you just say, okay, do what you like, stand on the sidelines and wait. You started to see the value turning back up again. You start saying, right, I'm going to passively bid into this. You start passively bidding into this, always aware that the 12,100 is below you. You start passively bidding in. The value short term is now bullish. Take your punt. When did you know it was bullish? Just after that candle broke there. So you take your punt into that, get a trade on. Let's see what happens. We don't have an awful lot of good, solid, responsive follow through here. So be not too shy at all in just taking your stops, taking your profits, making some monies. Stops at break even, guys. Don't be shy about it. Get it done. Get it done. Get your trade in. Get some profits. Make sure you're working the bids. Make sure you're working the bids. Coming into the oil, guys. Oil numbers next.